Buy, sell or rent your property with Century 21 and you could win a brand new 2-bedroom apartment on the Sunshine Coast in Queensland, Australia. Visit c21prize.co.nz for your chance to win.
Welcome back into the program. Great to have your company tonight. I'm filling in for Chris Gray, but I'm joined by Nerida Conisbee, mainstay on the show, chief economist at realestate.com.au, and now Charles Tarbey, chairman and owner of Century 21 Australasia. Great to have you both, because it is kind of the prediction, the crystal ball, if we had it, would be right there. Well, let's pretend that's the crystal ball, because look, actually, it almost could qualify, couldn't it? On that basis, Charles, you come in, you know, that break that we were talking about just the previous segment, what's changed in the last, say, 3 weeks to your mind? Or are we pretty much on track with optimism, keying off the North American story, and we seem to have found some familiarity with that?
It's a very interesting time. People make lots of changes around this time. There's lots of announcements you'll see on Facebook of people all of a sudden announcing they're going to go into their own business, or they've changed careers, or
because they get divorced.
I guess that happens too. That's good for real estate as well. That's good for the business.
Good for
as well.
apartments.
That's what I find is interesting, and I would say that the mood is slightly changing to the negative rather than the positive, which I'm very happy about, because last year we started off the year way too high in pricing and way too much in interest in real estate, and it should have slowed down a year ago. And I think now it's coming home. People are talking interest rate hikes instead of reductions in the US and so on, and stock levels are starting to climb a little bit, and I think that there'll be an oversupply in some areas. I think that'll be very good for the real estate market. Was that what you've been talking about?
Consistent.
Well,
I mean, we
didn't get a chance to listen. So.
We haven't been talking about it, but we on our site we track the number of buyers compared to listings, and that reached a peak, the highest level we'd seen in October, November. But dropped off in December. So it was partly as a result of listings increasing, but also that demand level started to come back a little bit as well. So, you know, I'd agree. I think it has changed, and I think it's a positive that, you know, we weren't getting enough listings in the market. There was a lot of buyers who were missing out. There was a sense of urgency that was a little bit worrying. And I think that moving into the start of the year, I really think that price growth will start to moderate.
When you see that, when you made that sort of a call, what are the kind of the lead signals that you look for? What are the first shoes to drop on moderation? Is there a profile? Is there a particular suburb that tends to be a litmus test in the key market over the years you've come to regard as the swing?
I probably not that detailed. I don't think we're as professional as that. Well, but I'd say to you that the way we look at it is just that modest climb in stock. When you start to get that modest climb in stock, then you start to notice the change then, or when there's a decline in stock, you notice it. And real estate business in the last few years has not been great. People think that real estate agents are doing incredibly well, and all these new startup businesses have occurred. But in boom times, agents negotiate their fees down, and there's little stock available, so it becomes very, very difficult, and that's the change that we always look for, is that increase in stock.
We've seen an election inside the last 6 months, can you believe? I mean, it's not even that length of time, and already a minister is falling by the by, short term, hopefully not part of a trend. But when you look even at the political connections and the rise of, say, Pauline Hanson again, the influence this will have on investor intentions, particularly from that underpin of the Chinese led interest on it. It's all about currencies, but it's also about political posturing, isn't it? We haven't seen it for a while, but now we've got to get used to it again. Do you think that may indeed start to affect, Charles, you know, just the overall demand?
Most definitely. I did an interview on an Asian channel recently, and they really wanted me to say that the Australian market is in a bubble. Bubble's going to burst.
Wow.
Every question they asked me was around that corner. I kept saying no. So the interview was cut very short, very quickly. I think, though, when Pauline Hanson once before talked about Asian immigration and so on, look, that's what gets reported in China, not how great Australia is, how negative we are towards them. And so, yeah, they start to think. And if we get that about us going to China as well, we start thinking maybe we'll go somewhere else. And I think that does have an incredible impact on the marketplace.
I mean, I think you can't deny how remarkably safe Australia looks at the moment. I mean, you've got Brexit, you've got Trump, You've got, a lot of the European markets really starting to tumble. And I think Australia has had 25 years of positive economic growth. We've got a pretty stable government.
It's what they report or don't report, Nerida, and this is the issue. As I was saying, they were trying to get me to say that there was a bubble in Australia.
Wow.
And that's really what they wanted to hear. And that's not the case. So that's what they were talking about, and that's what they're talking about in Asia.
Are there some areas, and this was part of the discussion last year on negative gearing, and then we ran into a budget, and then beyond the budget, we've had this sense of we're on borrowed time. The ratings agencies could move any day, literally, to downgrade us. So the ability to keep negative gearing untouched versus maybe shatter some myths about this is an area that's never going to be moved on. What's the smart money say this year represents? More of the same, but ultimately no change, or you think there could be a move into negative gearing as the government tries to balance the budget?
Sorry, you're asking whether negative gearing will be touched?
Well, do you think it will remain off limits, or do you think it is subject to, like a lot of areas, like aged care, the government will come in and start meddling?
I mean, it was interesting, Rob Stokes' comments at the end of last year when, as a planning minister, Liberal coalition planning minister coming out quite publicly saying that it should be scrapped. And I thought that was a bit of a change in the mood. I doubt, though, that the current government will make any change to negative gearing. I mean, they went in on the election policy that this was something that they weren't going to touch, and I would be very surprised if they did.
Even a sunset clause, though, to say this is our time horizon, but we believe times have changed. We must cut our coat.
I thought it was going to be on the table I thought when it first came out that it would give the current government the opportunity to create a hybrid model of capital gains. I had a meeting with some other colleagues, a handful of colleagues, and the Prime Minister and the Treasurer, and they said it's completely off the table. We win the election, it's completely off the table. That can change. But I think the biggest issue we have is not in negative gearing. Negative gearing is not illegal, it's not immoral, it's not incorrect. There's a significant amount of money that the government loses second by second in so many other areas where people are doing things illegally, where people are taking money under false pretences, and it's in the billions and billions of dollars.
But as a sector, does it look as if that might be its one weak link? Because it does look as if it's for too long been a right of homeowners but not of renters, for instance, to claw back something rather than if you're a renter, what do you get back?
Well, you do get cheaper rent. Yeah. I mean, the fact is that negative gearing has supplied an enormous amount of housing into the market.
It was removed, Nerida. It was removed. And it was very quickly put back on the table because it created a bit of a disaster.
More problems than it.
The government would have to do more.
And I think it ended up being an issue around a tax break for wealthy people. But that whole issue of it providing rental housing was forgotten. And I think, ultimately, scrap it. You can scrap it. There's no issues there. But if you do, then who's going to provide that rental housing? And someone needs to be provided incentives. So if government provides it, it's going to cost. If institutions provide it, it's going to cost. Or private, it's going to cost.
I had a quick chat with a young man called Scott who rang me just off the cuff because he wants to invest in property for his older age. He's 32 and he has one property and he doesn't know any other way to increase his family wealth or the opportunity. And that is where the significant number of negative gearing people lie, not in havens for the rich. And that's the area that they would have destroyed if they would have introduced negative gearing, the potential for people to buy a second home and to hang in there for 10 or 15 or 20 years and not rely on the government when they retire.
Buyers or sellers market this year? Because we looked at the list before and some areas that were kind of mainstays had dropped off to suggest potentially, and this is kind of almost a bit of a guess and a gamble, that maybe people are just being more realistic. They won't sell at any price. They're perhaps more happy now to just temper that enthusiasm. We've seen a big shift into part-time work in the last 12 months, and maybe that's been one contributor. But how are you seeing it, a buyer or a seller's market?
I think it's going to very much turn into a buyer's market as we move into the first part of this year. as more stock comes on the market from the apartment complexes that are filtering through in various parts of the country. It's not a surprise to me that Melbourne is an interesting place right now because its pricing was very, very good. Southeast Queensland was being touted by so many other real estate professionals, but it's an area that still has a long way to go. Their economy has still got a long way to go. So I think that at the end of the day, as that housing supply starts to build up, and it is in certain areas, that it'll make it easier for buyers to make an offer rather than have to rush in to purchase a property.
Your thoughts as well?
Look, I think it depends where you are. I think in Sydney it's pretty much going to remain a seller's market. Parts of Melbourne, though, I think particularly inner Melbourne, particularly apartments, I think it's going to be some really good buys there. Southeast Queensland, I don't know. We do see high demand from renters in that area. Queensland, Gold Coast in particular comes up as strong.
Anecdotally, the skyline is thick with cranes.
It is. I find it a hard one to understand. Perth, Perth's interesting. I think very much a buyer's market at the moment, but it's starting to get expensive.
So far we're leaning more on a buyer's market. Depends where you are.
Well,
depends where you are.
You look at Perth as well. And
Hobart, amazing bargains in Hobart.
That's true. So. Although, is it becoming less of a bargain story now that everyone's got wind of that? How long does it stay? Yeah. How long does it retain bargain territory for typically?
Hobart's interesting. We're seeing a lot of demand for Hobart at the moment, pretty much because it's so cheap. But I think for a lot of people, there's one thing wanting to buy there, and then another thing actually buying there. And then whether there's the economic growth and population growth to support demand as well.
Practicality. Well, it's interesting because you look then at pipeline projects back on Perth and you see things like Ritz-Carlton, you see the Intercontinental, all of these are taking shape whilst they're still in recession, but believing, of course, that these are cyclical moments in time. There'll be the bounce back. Alongside it, you've got the shared economy, you've got people buying these properties for Airbnb purposes.
Look, Perth jumped way too high to start with, Carson, and it's just coming back to where it should be, and I think Perth's a great little spot to start looking at.
I'd say here, what a wonderful way to end the show. Thank you very much, Charles. All the best for 2017 as well, and to you, narrator, as well, Conisbee from realestate.com, and Century 21 with Charles. Thanking you for your company, Chris Gray, and Normal Service, back in a week's time. See you then.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.